7th floor.
We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
People from all walks of life, all over the world, all over this industry, come together for the Rollup.
the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
People from all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go. Welcome to the nest. See you on the show.
Happy Friday. I went to the bodega this morning and I said, Feliz Viernes, and I almost said Jueves. It's Thursday. Came back from the Argentina trip and my Spanish is absolutely firing. Welcome back to Tokenization Tower, The Nest, broadcasting live from the financial capital of the world. You're watching the Rollup. Today's Friday, August 14th. You know what it is, Soho House Fridays for the Rollup fam. Meatpacking Soho House rooftop. I will see you there in a couple of hours. Ladies and gentlemen, we had a great show for you today. As always, shout out to our friends powering this show here from the Empire State Building. Plume, we're at the Nest. We're live from the financial capital of the world, from one of the most iconic buildings in the world. Title of today's show is Do Buybacks Work? A lot of rhetoric on the timeline about buybacks, about what's happening in the market. Robbie's joining the show imminently. He'll join us today. We've got GMoney in 20 minutes, and we've got Joseph Shalom of Sharplink here shortly as well. As always, guys, we have a great show ahead and looking forward to putting it on with you guys. Monero doing decent. Yes, privacy coins have had the best performance of most coins in the entire market. It's kind of crazy. No one's talking about it, but they are some of the biggest performers. And so it's really great to see. Let's get into it. Let's get the show started. Today's topics and more. We're live from the Tokenization Tower. We've got GMoney, Lido, and Sharplink calling in about the big deposit of Ethereum into Lido from Joseph Shalom and the Sharplink family over there. They're doing great. And we're just going to keep rolling through it. We got a lot of news, a lot of content, a lot to talk about portfolio and more on this happy Friday. Let's get into the markets, weather, and more. Before we do, let me tell you about Denari, building infrastructure for tokenized U.S. equities and bringing real-world stocks on chain. It is 90 degrees in New York City. It is hot. It feels like 91. I'm going to get some sun today, as I said. Soho House Fridays for the boys and girls at Soho House. It's going to be a warm day. It's not that warm in the office today. The office is always empty on Fridays. So we got the open office, got the open air, got my Diet Coke. Portfolio's doing okay. Kind of slowed down today. But I think we'll be just fine. Looking forward to talking about token economics and more. Before we do, let's talk about the markets and get into that. Let me tell you about FRAX, our stablecoin partner, open, stable, and borderless, bringing all different types of assets on chain with their digital dollar product. Visit frax.com to learn more about their stablecoin product. Guys, the markets. I mean, we got Bitcoin up a little bit, about flat after a dump to start the day. Ethereum as well. Solana down a little bit. Chainlink up a little bit, Near down a little bit. Not a whole lot has changed. I mean, we are in a lack of volatility mode. I mean, we are not seeing a lot of volatility. We are not seeing a lot of happening in the market. It's just kind of apathetic conditions. And that's what we've been expecting. And yeah, good morning, Labs. Good morning, Greg. Kyle Samani and Forward Industries are buying Solana. Let's go. 00 with that Chad of announcement with Kalshi. Indeed. Good progress today across the markets. Some announcements. I did see Samani buying more SOL, increasing his SOL per share, which I thought was great to see. And you know what else is doing well, guys? ETHFI. Not talked about a lot, not discussed a lot at all, but ETHFI is doing quite well. ETHFI is doing quite well. Hype's doing okay. Lighter's doing okay. Pump is just, I mean, Pump won't even give us a pullback to get more sizing. I'm trying to get more spot sizing on Pump, and I'm trying to get this thing down another 10% or so, and it just won't even pull back. So Pump's been kind of a lone horse, just ripping hard, and continues to do quite well. Shout out to Zama, our digital assets market partner, powering confidential computing on chain with their Morpho Vault deposit USDC confidentially on chain today. First of its kind, very cool product there. Honestly, the sponsors of the show are just, Zama's token's been ripping. Plume has had a strong move the last 2 months. FRAX is up quite a bit the last month. Near's doing all right. So, guys, waiting for Zcash to kind of break out of this compression. It's like just absolutely compressing. Monero, we just got a tip on. It looks pretty strong as well. Longer term, those privacy coins have been doing quite well. Otherwise, in the equities markets, ripping. QQQ is up, SPY is up, S&P and NASDAQ are ripping. Oil's kind of chilling, not really doing anything crazy. The yields are kind of coming down. The DXY and the dollar are pulling back, and the yields are coming down a bit. We need to see those yields come down. We need to see the dollar come down for risk assets to have a bit more room to breathe, specifically crypto. And we want to see inflation, which we saw this week, CPI and PPI in line or below expectations. Good news for risk assets. So stocks are steady. Oil still is the headline risk. And cooler inflation is giving bonds a little bit of time to breathe and also giving risk assets a little bit of time to breathe. So happy to see that in the markets. Good Friday. And let's keep it rolling into the next segment, our news. Before we do, let me tell you about Near, your home for discovering and using apps on chain, trade perps, swap, Near Intent, confidentially, all on chain. Explore what's possible with Near.com today. And yeah, we pull into our first piece of news. But before we do, I'm going to go on a quick standby because I need to introduce Rob and his new setup. This deserves a segment of its own. So I'm going to get to a line. I'm going to get to Savra. But guys, we're going to do a quick standby. We're going to pull Robbie up. He's going to go solo dolo and talk to you about what happened with his new sign. I think you guys are going to absolutely love it. I'll see you guys in just a second.
Yo, what's going on, guys? This is Etan with the Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
Alrighty, guys, we're gonna get Robbie back up here in just a second. He is fixing his sign. The sign, I think you guys are really gonna like it. It's a good sign. It's a nice branding for the boys. Freedom Guy, good to see you here in the chat as always. Man, markets aren't looking too bad, guys. You just gotta, roll through the punches, pushing the boulder up the hill. What do we have here? We've got Aligned with their new white paper with Sovra and Lambda class, bringing verifiable digital credentials to the new internet. So they're launching a protocol called Propria, a public protocol for verifiable digital credentials, letting institutions issue credentials once, then allows others to independently verify them without relying on shared databases. So basically, this removes the need for centralized intermediaries to do things from, identity authentication or access rights, qualifications, all these different types of things that are kind of verified today in TradFi and in centralized systems, doing that on-chain. And basically, we're trying to get to a point here where we have agents that are able to pull from open source, open databases on chain and do verifications, credentials, modeling, all on chain. And so what this is going to allow is for an institution to come on chain and be able to have this kind of distributed, I like to say unfuckwithable access to what is happening, and the proof is in the pudding of what is happening in this protocol, whether it be verifying someone's accredited status, whether it be verifying their income, verifying the facts or the truth of a certain qualification or matter. Where we're going to is, and where we've been is very clearly this don't trust, verify kind of world. And now we're bringing that into the institutional world, and products like this Propria product from Aligned and Sovra will do well. I had a great meeting with them down in Buenos Aires last week and spoke with RJ and one of their lead developers, Mauro, and we spoke just very, very deeply about just kind of what they're thinking about their prop AMM design, how that's been going, and just kind of scaling a lot of this tech in Latin America. Not many better teams out there bringing technology to the Latin American market and then scaling it out here in the United States as well. A friend of the show, longtime supporter. So that's what they're doing with Sovra and the Propria protocol. Let's keep it rolling. I thought this was particularly interesting. The X actually came out, and I've never seen this from a social media network before, but they actually showed their weights. Aligned was set for an airdrop like 3 years ago. Kind of forgot about them. Yeah, I mean, I actually told RJ that I was like, it's actually good that you guys didn't launch your token because it would be in a rough down-only chart, and you'd have to be dealing with all these angry community members, and it just would not be ideal. And so that was my take to them. I like what's happening here, Freedom Guy. I know you do. You are a big verified, don't trust guy, if I do say so myself. So X comes out and shows the recommendation weights here. This is the open sourcing of the X algorithm, and it's just kind of important showing you what actually matters. So what works in the X algorithm, how they are, valuing different people how they're valuing different metrics, how they're valuing different people interacting with different posts, and kind of what that process looks like. And so, yeah, I mean, I thought this was pretty important for the X algorithm. I wanted to see this come out, and I said this to our socials team. You know, we kind of went over it, talked about it. And so, yeah, you just don't want to get muted, reported, or blocked. That's the kind of the key takeaway here. And you want people to be replying. The biggest boost is to get somebody to press the copy link button on your X tweet and then share it externally, because it brings people to the platform. And so that is, I thought that was interesting. So if you're in the game of farming your own tweets, I would recommend your friends copy the link and share them with their friends. So yeah, guys, we're gonna roll into the next post and into the inaugural once a year introduction of Rob with the fully branded design that is almost complete. We've got a little bit more touching to do, a little bit more feng shuiing to do, you could say, but the guy's almost dialed. It's been a long time making for this guy. You know, he's got a little tism, you know. He loves the small things in life. You know, he likes the simplicities in life. But we dropped a bag on the sign, and so we had to put it up there. Otherwise, I was going to need a little wire transfer. Mr. Stoker, our lead producer. So we're going to get into that. Before we do, let me tell you about 1inch, one of the key partners of the show, who is bringing liquidity for RWAs on chain. You may have heard of this concept of shared liquidity flying around. Products like 1inch Aqua let you approve one wallet balance to back multiple positions at the same time across pairs, ranges, and chains. You're not splitting your tokens, and you're not depositing them. Yeah, you're not leveraging them either. It's a different way to keep your liquidity active in more markets. Check out 1inch.com/Aqua. Without further ado, let's bring Rob up, see what he's got going on here. Let's see what he's got. Bang! Look at that sign.
What an intro by my lovely co-host, Mr. Duca Top Blasta. And what a shout out to Mr. Stoker. Mr. Stoker's like Mr. Anderson from the Matrix movies, if you guys get that reference. Much love. I'm a little late today. Had some things happening at the house. But we're here. We made it. We're closing out the week. We're going to have a fantastic Friday and pray. We're going to absolutely pray for weekend pumps this weekend. Man, what I miss, guys. I see Freedom Guy is absolutely cranking in the chat. Yeah, you know, a little touch of the tism couldn't hurt. You know, it's like when you spice up the soup, you put a little spice in there. Freedom Guy, what do you put in your soup? A little oregano, a little green pepper. What do you put in there? Elbow cough. I like what's happening. I love what's happening here, Freedom Guy. Greg, yeah, thanks for being here. Andy's got a little echo in the meat. That's only for the fellas behind the scenes. I know, we're good.
We're all good. I think we cracked the meat here. We reset the Mac Mini. Everything's good. Let's get this video up. I thought this video was hilarious, guys. I think you guys would really like this one. Agents fuck up. We raised a $2.3 million seed round, pre-seed, to warn you before it's too late. Preface, Rob, have you seen the movie Obsession?
No, I haven't. I've heard fantastic things about it.
You gotta watch this trailer here, and then you gotta go see it with your girlfriend this weekend. That shit is ridiculous. So let's go ahead and play this video, guys. I think you guys will really enjoy it.
Yeah, isn't that crazy? So how are those out of office emails?
Can we not talk about that right now?
Okay. What? Sorry, Ed. It's the second time they texted me that. I'll be right back. What is it, dude? I'm busy.
Okay, so...
What is it?
I looked into your out-of-office emails, and she sent out replies to all 30,000 emails in your inbox.
I told her to only reply to emails when I'm out of office.
Look, you know it's my job to surface these kinds of failures for you. And it may suck to hear, but I don't know. She sent 30,000 emails and then lied about it. It's either a lack of guardrails or context rot or I don't know, man. I'm gonna pull the traces and look into it for you.
I care about calling tools on your behalf so much. I don't think I can function without your prompts.
Embarrassing. Calling tools on my behalf.
She's an agent.
Any human oversight?
Yes, without any human oversight.
What do they say? If you're a 2 and she's a 9, she's an
Mika?
agent?
Yeah.
Did you send an out-of-office reply to every email in my inbox? All 30,489 of them?
Oh, liar.
No. Don't do that. I thought we were having a successful user session.
We are.
Then why does it matter? I thought I followed your prompt.
You did.
I did what you asked. I followed your prompt.
Just give me a second to freshen up.
Yo.
Dude, unreal fire. Unreal.
What a
I'm down.
product launch video.
So, context is there is a podcast from David Senra that just went out with the positioning girl who positions a lot of these Silicon Valley AI companies. And one of her things was that all of these launch videos are all the same. Like they're all the same thing. You got like this person who's sitting around and they're in a chair in the office and there's like some little cool animation and there's like some little, basic thing and then that's it. And it's like, oh, okay, okay.
Lulu
cool.
Chang.
No, yes.
Lulu Chang Meservi, founder of Rostra, is the
insane podcast.
Yeah.
And so I saw this video right after I listened to that podcast and I was like, holy shit, this thing did the numbers. And this is just a fire video. I mean, I thought this was really original and I really liked it. And you got to see the movie Obsession.
Yeah. And I mean, this was an incredible launch video. You can, not only is it dramatic, it's just good content. Like someone who even, is vaguely adjacent to this industry, but it just enjoys like drama and action movies, like would find this entertaining and also see the AI, like it not only influence, but just like the AI aesthetic and kind of get a different feel as far as like how they're taking a spin on like the agentic world and see it combined in like a very, very entertaining way. Even someone who's not in the industry and looking to use the product would find this interesting, which I think is a great litmus test for these launch videos is like, would a normie who doesn't even really care about the product or the industry find this entertaining? I think that's a great litmus test. But then you also, if you are in the industry, then you get it. So very, very cool launch video.
Yeah.
And yeah. I want to see more of this.
Yeah.
I want to see more of this.
All right, let's keep it rolling into Ethos. So Ethos put out this tweet, are you human verified yet? Might want to be for next week. Real humans only. Great post. So true. And so I just want to kind of like go on a little tangent here and say, I'm going to verify. I am 100% going to verify. And I am in the position where doing these small things right now on chain is going to have a potential outsized reward in the future. And so yesterday I posted out about AERO, their free mint thing. And basically I think that there's an opportunity here where you're going to have the ability to do these different mints on chain right now, deep bear, that are going to give you some sort of airdrop, some sort of reward in the future. Like there's a strong chance that AERO mint that you get allows you to be in the better ICO round than the rest because you were there early. And their AUM right now is 3.5 billion. Let's say in the bull gets to 10 bill. All of a sudden this thing's making a couple $100,000 a week, couple mil a month, $25 million annualized. Token launches and things prints, and you're in the earliest stages of the ICO because you minted some random NFT on Base for free. Same thing here with Ethos. Ethos has been growing their reputation network. They've been doing a damn good job. And why not just join the platform for free? Same thing with FOMO app. Same thing with FOMO. Why not just make a FOMO account? And so, guys, if you're watching this, I just urge you to take this chance to join and participate in the apps that we know are going to be massive winners in the upside. I don't know if it's Ethos, I don't know if it's Osero, but I think it's FOMO. It's definitely Polymarket, and these sorts will probably yield some sort of opportunity, airdrop, etc. in the bull, and you'll just want to be positioned for that. You just definitely will want to be positioned for that. So, what's the name of it again? That is Osero, O-S-E-R-O. That mint might be gone. This is Ethos Network. If you scroll up, you can see that. And then the app is FOMO. And then I think trying Polymarket, of course, on the mobile app is worth it as well. So we have a ton more news, ton more to talk about from the portfolio side and other things as well. But we've got GMoney ready to join us here to talk about something that is new, which is fake world assets, which is gotcha, which is the hyperliquid of gotchas, and just kind of what he's seeing on chain now. Rob, someone wants to know the lore behind the Rollup. Greg wants to know the lore behind the Rollup name. Brand name.
I mean, well, Andy and I met in 2017. Previous to the Rollup, we were DeFi Slate, which was pretty fun. It was a fun era of the Rollup. And I mean, man, we were thinking about the direction of the space last bear market. I mean, we probably just recently came across an anniversary for the Rollup. I think DeFi Slate turned 6 as of like a month ago. The Rollup probably turned 4 as of a month ago or so. And so, we've been doing this a while. We saw that this trajectory of the space was changing in 2022 or so, and it was time for a shakeup. It was moving beyond DeFi. It was moving into the direction where blockchains were getting used for finance far and beyond the early renditions of yield farming and DeFi summer. So we decided to broaden our aperture a little bit and embrace the chain. We decided to embrace the chain, the Rollup. It also gave us a little bit of leeway to expand the scope of our content beyond just blockchains and DeFi and apps. But also Rollup is just a pretty generic catch-all for everything that's happening in the space. You guys see the wheel. It's very contoured. I think it has a nice aesthetic. We've deliberated dropping the. Yep. People claim it's sleeker.
Like that one movie.
The Social Network. It used to be the Facebook. Now it's just Facebook.
Yeah.
And so, I mean, we go through these brand evolutions. I don't think we've ever made a full pivot, but we have gone through, the Rollup has gone through multiple iterations, multiple eras, multiple evolutions. I'd imagine that we're going to go through more evolutions in the future. And, the Rollup is certainly a milestone in this company's history.
That's right. While we get GMoney up, we're going to pull him up in the back, get him set up. Quick question for you, Andy. Do you think Pump will become Solana's version of Hype and lighter later on? I think it already is. I think the answer here is that you want to own the casino for the biggest casino games on chain. And what are those two biggest casino games, speculative games, whatever it is on chain? Those are perps and those are meme coins and on-chain trading. And so why would I trade perps? Well, maybe I think I'm good. I just made 8 to 10K on a pump fund long. Great. Awesome. Beautiful. But that was stressful. Why don't I just own the casino? I just want to own Pump Spot. I just want to own Hype Spot. And so I think these are two of the biggest on-chain speculative venues that will continue to grow. And so rather than being one of the minnows in the game, trading perps, trading memes, trying to hit a 1000x or a 500% long or short, why not just be the owner of the game itself? And so that's how I'm thinking about owning Pump and owning Hype. And we get it, bro. Forrest says, I like to broaden the aperture and also expand. Yes, sir. Good. Nice to see you, Forrest. So that's my take on Hype and Pump. And I think that rather than trying to be a little shrimp in the casino trying to 1000x, there's a 5x in front of you on both of these in size the next 2 years. There's a 5x on pump and hype or more in size on both these spot, DCA, enter, hold. Like it's that's it. So, all right, guys, let's get GMoney up. He is ready to go in the back, and we will be getting him up imminently. For those of you who don't know, GMoney is a big on-chain trader and has done a good job of, keeping his trades public and bringing them up and, launching different projects, NFTs, and is now a big FWA bull, which is fake world assets. We've not done a segment on fake world assets yet, but I think that you guys will like it because this is a new primitive on chain. I actually just top blasted on FOMO. So a couple new things happening here.
Mr. Duca Top Blaster.
Is one, I've got a personal FOMO you guys can follow. And the other is the Rollup FOMO is established, but it's not exactly ready yet.
Is it?
Somebody in the chat, I think it was New Type, was asking for a portfolio tracker of the Rollup. And so that's what we're going to try to deliver for you guys.
Yeah, I think that's important because there's a couple of dashboards that consolidate the revenue producing tokens that we believe in, but it misses quite a few because revenue oftentimes is not programmable. It's difficult to attribute revenue to certain projects, even when it happens on chain. And we were chatting with a partner of ours earlier today, talking, they closed a few deals, they are generating revenue, but it's not showing up on chain in some of these, data aggregators or dashboards.
Yeah. I mean, like Chainlink has that problem, right?
Yeah,
they make all these massive enterprise deals.
Mm-hmm.
Right.
Chainlink does show up in that net token value flows dashboard as one of the highest ones on the list. I think because I did a segment on this yesterday, Hyperliquid and Cake Swap or Pancake Swap is are the two up there. Why is Pancake Swap up there? I'm not sure, but obviously generating revenue. Chainlink was like third after those two. So it does show up, but that does not by any stretch capture the totality of the revenue that Chainlink is bringing in. So
agreed.
It would be very cool to get some more attribution about where exactly these revenues are coming from, how much is flowing into the tokens. Regardless, I think a public portfolio dashboard for the Rollup would help everyone follow along as we're making moves in real time.
Yep.
Guys, I think we've got GMoney all set up. I see he's ready behind the scenes. And I'm excited to chat about fake world assets. We had GMoney on the show once before, chatting more about AI. That was a great segment, wearing a very cool looking watch. So why don't we go ahead and bring him up and have a quick chat. Fake world assets, what's going on in that
GMoney
world?
Man. What's up, buddy?
What's up, guys? How you doing? Thanks for having me back on.
Good to see you. Good to see you again. How's it going?
Good. Yeah, man. I heard you talking a little about Chainlink as I came into the room, and it's funny because I think Fake World Assets has done something like over 90% of VRF volume for Chainlink since it launched.
Yeah.
Yep.
So I think it's like really interesting because I know people have been talking obviously about Ethereum and all the transactions gone on there, but like I think it's really cool because it's also probably helping Chainlink as well.
And so VRF is the randomized functionality. And so maybe that's a good place to start. Chainlink has this like verifiable random function. Quick backstory on why I actually know anything at all about verifiable randomness is because I started in Bitcoin playing poker online. They had a verifiable shuffle and randomizer right there where you could check the hash, which was very, very fascinating to me back in 2016. Anyway, so Chainlink provides this verifiable randomness to protocols like Fake World Assets. Maybe, when we're exploring fake world assets, we can just talk about how it's incorporated and it'll branch out from there. Like, why is this an important mechanism, a component to fake world assets? And then, please feel free to expand to fake world assets more broadly.
Okay, cool. So I'm going to give you my understanding of it because I'm not part of the team. I'm just like, somebody that's YOLOing into the token and whatnot. But So basically, like, are you familiar? If you have to be familiar with gacha mechanics, right? So the way a gacha machine works is you spend some amount of money. You don't know what you're going to get. Think of it almost as like as an NFT mint, but maybe it could be a lot of times it's been really catching fire with trading cards and collectibles, right? Where let's say you spend $50, $100 for a pack, you're going to get a card. You don't know what that card's going to be worth, anywhere between $5 or let's say $50 and $1,000 or whatever it is, right? And there's some distribution on that. You can then immediately sell that pack back to the website at some percentage on the dollar, somewhere between like, let's say 85 cents to 90 cents on the dollar, and get that instant liquidity, and then go back to pulling and playing again, hoping you get that chase card, right? That's the way like most gacha mechanics work, right? So obviously in all those scenarios, there is randomness there, right? And so, I think maybe on some sites, you trust that the site has it, right? This is crypto, so it's always trust but verify. So, obviously utilizing an on-chain VRF that people can go and audit if they don't think it's fair or whatever. It's on-chain. And it's funny because I had experience with this personally when we did our black box drop at 90cc a couple years ago, where somebody actually did call us out for not being fair, and we're like, dude, we use the Chainlink VRF, so
nice. You
can like go and audit it, like, you know what I mean? Like it's there. So it adds that layer obviously of trust on there. So that's why, like, I think not only Fake World Assets, but probably other gacha sites use some version of a VRF, maybe not Chainlink, but from somebody else. What I found really interesting about Fake World Assets is that in all these gacha mechanics, generally, like, you go and play and you're hoping that you pull something and like you get that like great like payout or whatever, or maybe you're hoping to farm a token or whatever, and you're hoping that what you lose is offset and more gained by like some sort of token drop. Classic like crypto mechanics. What I thought is really interesting about Fake World Assets is that I can deposit NFTs. Anybody can deposit NFTs as long as they're whitelisted, and you can technically become the house, right? So instead of pulling and hoping you get that win, you can deposit and you earn a yield from every spin based on how many spins, whether it gets pulled or not. And then the only thing you really have, the risk there is, right, is if it gets pulled early, right? So like there's a distribution curve of like, hey, like this is supposed to get pulled every 1 out of X spins based on the amount of ETH that's backed. And if that happens faster, then like that's just unlucky. And if it happens longer, then you're lucky. But like there's yield there, and that's like what I think to me has been like the really cool, awesome thing about this protocol in general. I don't know if you guys have been like messing around with it at all.
I have not, but I top blasted the shit out of it like 4 days ago on FOMO. I also think that the name Fake World Assets is hilarious because we've created this whole real world asset thing, right? Like, we're gonna tokenize all the real world assets, but like, what is a real world asset? They're just assets, so it's kind of a meme in and of itself.
That's like the same thing with like NFTs, right? When people are like, oh, this is an NFT, I'm like, well, like everything's an NFT, right? Like all three of us could have this hat, but if my hat has a coffee stain on it, like it's not fungible with your hats. So it's like it's the same thing. It's like we're coming like full circle, I feel like.
And it also feels like the snake eating its tail, and crypto is kind of like making fun of itself, which I think is going to be hilarious to the insiders and maybe the outsiders.
Well, yeah, it's like let's take NFTs and then let's add like a gambling speculative element to them, just like
yeah, I mean, like to that point, right? Like I think crypto it's kind of like taking the mask off of like it's like everything's gambling, right? Like prediction markets, meme coins, gacha, like these are all like different versions of gambling, and it's almost like you walk into the casino, like which game do you want to play, right? It's like, do you want to play the slot machine, do you want to play like the roulette table, like blackjack, whatever it is. And so it's just like another form of like a game.
And I think, it's funny because now you see all these things online. People are less invested in the stock market. They're cashing out their 401ks and going in sports gambling. But like in totality, that, the financial education that gets leveled up. Like, people can choose to play whatever game they want. They can choose to play a game like the stock market that happens to have the odds in their favor. They're going to win more often. They're just going to win less sizably by an order of magnitude. And then the risk appetite of people is just going to induce them to go play these ridiculous games because it's not enough. Like, the gains that they can get in the stock market just aren't enough for some of the risk appetite of people out there.
Well,
but,
I mean, I agree with you traditionally speaking, but I mean, if you look at the stock market over the last 12 months,
I know, right?
Like they're moving like meme points.
Case.
You know what I mean? Like it's kind of crazy.
Yeah. So GMoney, what is the token use case or value proposition? Like the fake world assets, like, we got Mr. Duca Top Blasta here, my co-host, but then actually
because they said hyperliquid of Gacha. I was like, all right, that's all I need. Done.
And so you explained the protocol, but how does that tie into the token?
Yeah, so a portion of every spin goes into buying back the token. Some of it goes to the team. Some, I think the majority of it, I don't know the exact numbers. Obviously, it can be changed. It's not fixed programmatically like forever, so it can change over time. But I think it's something, I think right now it's like, I don't know the exact numbers, but a portion of it goes obviously to the people that are supplying the prize pool. A portion of it goes to buying back the token and burning it, so creating some buy pressure, and a portion of it goes to the team to kind of keep them obviously incentivized long term and aligned for building. So that's pretty much kind of like the circular loop. And now that's like the initial loop, right? I know people are talking about like maybe using FWA for spins. I personally don't know how I totally feel about that, but I'm just like, I'm gonna play the game as it lies, like as new stuff comes out. But like, I know people are talking about kind of creating your own pools. So like, I have a big NFT collection. What if I wanted to kind of like do a pool of just my NFTs, and people are willing to kind of take spins on there. So I think there's like a lot of optionality that can be done on it. And like I said, I think the reason why hyperliquid of Gacha makes sense is that, to me at least, is that, okay, let's say I'm on Collector's Crypt, I pull a card, I'm like, great, I don't want to sell it, I want to keep it in my collection. I can bridge that over from Solana to FWA using the Emblem Vault, and then I can deposit that into the Fake World Assets Vault, and I can earn yield on that Pokemon card that I otherwise would never have earned yield on, right? So to take, like, I've been looking at it from my NFT collection, where I just put up a bunch of NFTs, paired it with some ETH, and I've been earning, I think it obviously varies, but I think it's like a 50 to 70% APY after farming rewards stopped. So it's still pretty good.
And so what's the risk of losing them though? So you have to
with
be
the risk of
selective.
Losing, yeah. So I'm not putting my ape in there, right?
Your profile pic or anything.
Yeah. So but I'm putting stuff in there that I'm like, hey, if it gets taken, I'm okay with it. I won't lose any sleep at it, but it's earning yield. And otherwise, up until this point, my biggest issue with NFTs has been it's been very capital inefficient, right? I have a large NFT collection. I can't do anything to earn yield with it. This is the first time that there's some sort of sustainable yield for NFTs, in my opinion.
Yeah. Because this thing has to get inventory, right? And so in order for people to come to the platform and have NFTs to pull, they're crowdsourcing NFT inventory from everyone who wants to create pools and put their NFTs as deposits.
Right. So you can't create a custom pool just yet. I think that's something that the team is working on. But the first iteration of it was you put up an NFT, you pair it with ETH, right? And so then people, let's say then you spin and you win the NFT, you can decide to either take the NFT or take the ETH at 85% of what's backed in the ETH, right? So if it's backed by 1 ETH, you can get 0.85 ETH, and I would get the NFT and that 0.15 ETH returned to me. Or not the 0.15 ETH, sorry. That goes in fees.
Right. And don't the NFTs have to be liquid? Is there enough liquidity on these NFTs in order to cash them in for ETH?
No, because when you put it up, you pair it, right? Think of it as you're pairing in an AMM, right? So I have the NFT and I put up 1 ETH, right? And I pair that into my, let's say, position. You pull it. You have the option to either take the NFT because maybe you want it, you think you could sell it at a better price, or you just take the ETH immediately, right? So that's where the immediate liquidity comes from.
You take your ETH back that you put up originally to spin the gotcha?
No. I put up ETH I put up the NFT as inventory, and I pair it with ETH. Right?
Okay.
So that
as a liquidity provider.
As a liquidity. So I'm basically doing like a liquidity pool for this one individual NFT. You pull it and you win my NFT. You can choose between taking the ETH that's paired with it or taking the NFT.
Okay.
Right? And that's where the instant liquidity comes from.
And is it always one ETH, or is there? Right. You can put more ETH for more valuable NFTs would pair with more ETH.
Yeah. And so you put as little as 0.05 ETH.
Okay.
So that's
okay.
What, like
so it's
$100.
So it supports a wide range of NFTs spanning from very invaluable to very valuable ones, because you can kind of set the price at which you're willing to provide this NFT as liquidity.
Yeah.
Makes sense.
And then obviously, like the more ETH that's backed by it, the lower the odds of it getting pulled, right, within the pool. And that's dynamic.
Okay. Okay.
Because is this all just in one smart contract? All the NFTs in the ETH, it's just one liquidity pool basically? It's like one smart contract.
I couldn't tell you.
Yeah,
that's
I think
above
it's
my
got to
pay
be.
grade.
Yeah. Well,
you think
that
what
just seems like
makes
the
you
biggest
what makes
risk.
you say? Yeah,
I mean, that
just
seems like the biggest risk here. I mean, obviously, it's just like, I mean, everyone's tweaking about AI and smart contract security, but I mean, this is on chain, this is crypto, this is what you deal with. I'm just curious, like, if you think about what the premium is that you're paying to deposit, because I saw his tweet, I think it was from Cirrus. He was like, "Oh, the owner of Yuga Labs has all of these apes that he hasn't, touched in years. Why not put them into fake world assets, make, earn yield on them?" And I was kind of thinking about, why not? Okay, maybe you get it pulled, but that's that, or maybe you get exploited and you lose them all. But that's kind of like the only two thoughts of like why he wouldn't do that.
I mean, what makes you say that these things are all in the same smart contract? Because if you think about like a Uniswap V2 for the basic example, it's an AMM order router, but all of those liquidity pools are in different contracts.
Yeah,
like
I'm not sure.
the liquidity is segmented, right, based on each pool.
Yeah, as GMoney says, above his pay grade, above mine as well.
Like, I think to that point, right? Like, it's just kind of like everything in crypto, right? The longer something's been around, the greater the TVL, the bigger the honeypot. That kind of like ensures the security of it. And so I think in the first version, because I wasn't a day one spinner, or like I didn't get involved really till it was like around 15 or 16 million. So it was out for a couple of days at that point. But I think I think there was an exploit on the first launch of it. And then they just they relaunched it afterwards and re-audited the contracts and whatnot, and then launched again, and it's been going well so far. I think the TVL on platform was like a little over 2 million when last I checked. I think, I'm not sure though.
Yeah, I love this kind of this is the kind of stuff that only comes out and gets launched during bear markets.
Yeah,
that's just when people are most creative.
Yeah. I mean, listen, like the thing that I like the most about this, I think this is one of the coolest things I've seen on chain, like since DeFi summer. You know what I mean? Like, I'm just like, whoa, this is like so cool. I had never even thought about it. I remember like when it first made sense to me, like I immediately like DM'd Rhinotic and I was like, yo, this is genius. Like, like,
do you think fake world assets is gonna bring back the NFT market?
Yeah, well, it's gonna bring back Ethereum. I mean, it's like the most of the transaction volume on Ethereum for, I think since initially since it launched. I'm sure it's definitely slowed down, but I again, like as I've been thinking about it, I'm like, I know Rhinotic like tweeted it last week, was, one, it's been a ton of transactions on ETH, a bunch of transactions on Chainlink, like what other ETH centric protocols like are being involved in here, and like you need stuff like this, because I think like when you look at like obviously tokenization, real world assets, stocks, all that stuff is coming on chain. That stuff's not sexy, right? Like how do you like really get people excited about crypto? Like NFTs was by far the most mainstream crypto has ever been. It was by far the most fun crypto ever was. Yeah. And I think stuff like that, like this, even like a gotcha mechanic where ultimately in like, how far away are we from people being able to download an app, spin something. Like I've been thinking of ideas along these lines of like, you know, NFTs are back. You can like win. Like if NFTs are worthless, but you have a shot at winning. I think the most expensive Grail on FWA right now is like 600,000 or 700,000, right? So it's like, you know, that sounds like it's a little more than worthless, you know.
Imagine spinning like, you know, half an ETH and getting that, right?
Yeah. Well, not even the spins are the spins are 0.1, right? So
every spin's the same cost.
Yeah, and it moves dynamically based on the pool.
And so,
do you think if ETH is $5,000 again, they're gonna probably adjust that, or are we spending $500 a spin?
I'm sure there's like I think
Be
this
some
is where
options
like
maybe,
because people would like, this is what you see on classic gotcha sites where there's like the $25 pack, the $50 pack, the $1,000, right? And then like the odds are different based on that. So I'm sure we'll probably see some sort of segmentation like that.
And you're totally right though about like this type of like, oh, I spun $1,000 and I got a $80,000 NFT out of it, screenshot, TikTok. I mean, this is what like Ansem and the guys are going on about, where it's like, my wallet has 100 mil in it. This, you know, last week it had 0. Like, what happened, right? Same type of vibe here.
Yeah, like I think also it's kind of to what we were saying before, right? It's like, what type of gambling game do you want to play, right? Like how, like personally, like I'm not a meme coin guy because I don't like being glued to my screen 24/7, where it's like I take my eyes off the screen for a second and I'm down like 90%. That's not a game I like to play. It's for some people, it's not for me. And but I do think like, I mean, some people do. There's like a whole talk about it on Twitter this week. But like what I do think is people want to play like a casual game where you're like, hey, I want to risk $50 to see if I can make like 1,000. And I'll spin it and I have a good experience, and you know, I don't lose everything when I don't win. I have a shot at even like breaking even or making a little bit of money so I can play again. Like those are the games that I think people want to play, right? So it's kind of like pick your poison.
It's the reason the lottery is as you know, it's as big as any of this, you know, as big as some asset classes.
So to that point, one of the things that I suggested, and I hope they're working on it, is some sort of progressive jackpot. So that like a portion of every spin goes into it, right? Because like I personally never play the lottery, but when I see like a Powerball like lottery like get to above like 500 mil, and I'm like walking past like the gas station or the grocery store, I'm like, all right, like I'll spend like $10 on it, right? Like, why not, right? But like 100%. A normal lottery, like I'm like, no, like 50 million, like not enough for me, right? Like meanwhile, obviously it's life-changing money, but like I think it's like the same type of thing. Like if there's some sort of progressive jackpot NFT, like at some point, like are you willing to spend like $100 for a shot at like, you know, $5 million or like whatever, however big it gets? Like most people would.
GMoney, I love it. I love perps, I love memes, and I love this gotcha idea, because what it does as someone who is just not even trying to spend much time on the computer looking at screens on charts and markets and having to make active trades much more than like a couple times a month. I mean, this has just been like a culmination of 3 cycles of accumulating capital, of understanding how to kind of move in the markets, you know, 5 figures, 6 figures, 7 figures, et cetera, right? And so it's just kind of like different strokes for different folks. But what's exciting to me is, you know, it's still so early for FWA. But if I can start to kind of like, you know, ease in, you know, couple grand, couple tens of thousands, 6 figures into the what I call like the house, which is like the hype token and the pump token and maybe the FWA token. What I'm playing for is I'm playing for like a 3 to 5 to maybe higher, like a 3 to 5x, maybe higher on some size. And I'm kind of benefiting from all of the folks who are trying to do from 1,000 to 800,000, because I understand probabilities. It's not my game. It's unlikely to happen, but someone's gonna do it. Someone's gonna hit for a 800x on this app, and it's gonna be fucking insane. And so
let me inject some hopium into the thesis you're describing, because I was at a conference. This was going back like 6+ months ago. I was at a conference and I was chatting with Joe Lubin, co-founder of Ethereum from back in the day. This was pre-DTCC tokenization protocol things. And he was describing how the DTCC is working on this. And I don't want to put on my suit too much. We're talking about fake world assets here. But he was describing how tokenized equities, because they have KYC metadata things associated with them, they don't fit into an ERC20 token standard. Well, I said, what token standard do they fit into? He said, potentially NFTs, right? That is what they're experimenting, is the token standard for tokenized equities. So I could actually see how hilarious would it be fake world assets becomes the hub for real world assets and becomes a place where you actually get NFTs as we know them, as well as tokenized equities.
So imagine that.
Interestingly
you put up
enough,
like
right?
100K in NVIDIA tokenized, and it can be and you earn yield on it.
Interestingly enough, there's been a couple forks that are doing tokenized assets. I think most of them are on Robinhood, but like, you know, messing around with these tokenized equities on different chains, which I think is also something that's been really interesting that's been happening in the space. But to your point, Robbie, like the second most expensive asset on FWA is a Pokemon card. And it's a real life Pokemon card, right? So it's like, I think it was pulled from Collector's Crypt and moved over via Emblem, and now it's in there and it's farming. I've heard rumors of other cards potentially going on there, like very high value cards. Because like, again, to your guys' point, right? Like I want to be the house. I want to own the token. Yeah. Like that, like gets me paid because people want to gamble, right? Like I think everybody likes that from like when you put on your investor 100%. Hat, you're like, yeah, give me more volume, give people what they want, and like let's make money off of it, right? And that to me, like at $20 million FDV, it's a good bet. Like I personally, right? Like
I'm interested to play the game. Like I'm interested to trade perps. Like I'm interested in trading memes. Like it's all fun with $1,000 there, $5,000 there, whatever, a little, you know, whatever. But you know, you put on size in these things, or you put on some portion of your portfolio into these, like the owners of the casinos of the best on-chain speculative environments. And as long as the tokenomics are half decent and the revenues and fees are getting, you know, buybacks or not being just dumped or whatever it is, I mean, it's a pretty straightforward investment.
Right. No, I totally agree. And that's why I really I think there was a tweet yesterday of somebody pointed out that I think if you were to value it on an annualized basis of like how much buybacks have been done, I think it's trading at like 0.5% revs or some, 0.5 revs, like revenue to FTV ratio. So it's like incredibly cheap, obviously compared to all other tokens in crypto, even like the revenue meta ones. So it's good. Like
that is so funny that has proliferated so much. Keenan says, imagine buying stock packs. Yeah, that's what we just said. Chilio wants to know your Quotron thesis. I don't even know what that is.
Oh, wow. Okay. All right. I love it. So that, I mean, listen, this thing's under 500K. So I don't know if you want me talking about it on air, but I was hit up by a couple of smart NFT guys. It seems really interesting, and been buying it.
Nice. Okay. Quotron. Interesting. Yeah, we don't do too many 500K shitters around here on the show, but good to have you. So I guess, I mean, how big are we talking here for FWA? Like if you had to say 6 months from now, a year from now, what would have to go right for your bull case here? And like, what is your maybe like conservative case?
Yeah, I would say that for me, like the number one thing that I think matters the most on FWA is spins and DAUs. And like, how do you get that, number up and to the right? So I think the thing that I like that I've seen so far, and this is what I like about Ethereum in general, I think Ethereum is like probably the best ecosystem that does this better than any other ecosystem. Is one, there's a lot of great creativity from builders in Ethereum. I think like the most interesting things that come out of crypto for the most part come out of ETH. And then when those things are built, people, don't get me wrong, there's always forks, but people would rather build on top of it than like fork it, right? And so that's what I've seen that's really interesting with FWA is that immediately somebody launched Mega Rip, right? Which is where we can all pool our ETH together. So you can put up like 0.1 ETH and then you get your pro rata share of like the pool as it ripped. I think it did $60,000 worth of buys its first day. And like, I contributed, I think like 0.1 ETH or something. And I got like I think I got back like 0.092, so like I lost 8%. But like I had like a shot at winning the jackpot, right? It's the same thing like in Lotto where you're like, let's pool this together and win the jackpot, right?
But isn't that kind of gaming it though? Like if you're like put it the other way around, imagine you're like, you know what, fuck it, I'm putting my PFP on this thing. And then all of a sudden you like on-chain GMoney just put his PFP into this. Let's do the biggest possible, you know, raid like CTO and let's get his PFP. And they put like $600,000 together, right? Isn't that kind of like collusion of the game?
No, because it like the odds get adjusted, right? So it's like there's still, let's say there's like a 1 in 20 million chance of like my PFP getting pulled, and like $600,000 of fees get like $600,000 worth of buys happen. I'm getting paid every single time it doesn't hit, right? And so there's still like, let's say that 1 in 20 million chance of it hitting, right? So it's like a very minuscule chance, and like you're just playing the odds there. Like I actually tweeted out, I'm like, I think somebody should build like some sort of insurance protocol that you can pay to ensure if your NFT gets pulled early, right? Because like, let's say I did put my PFP on there, and I'm like, okay, if I get pulled, if it's 1 in 20 million and I get pulled in 1 in 20 million, so be it. I will have hopefully made my money back and then some by then. But if it gets pulled at 1 in 5 million, I'd buy insurance to like make myself whole so that like the loss isn't as bad, right?
Yeah, exactly. It's like selling call options on your asset, and it turns these NFTs into productive assets and prints yield on them. And it goes for any asset. I mean, this would increase the potential yield of any asset, make it productive and scale it, because it's another utilization mechanism. Like, you know, take a stock, for instance, right? People don't loan it out very often, only when people are going short. This is a whole nother dimension, a whole nother marketplace where you would need to provide those assets as liquidity. People are going to pay yield for that asset as liquidity, as in, like, it could, you know, ramp up the amount of yield that you're getting on some of these assets. GMoney, what happens if it gets pulled though in this big ticket, you know, era? Like if someone pulled together a bunch of funds, they end up pulling like your PFP or a, you know, gigantic Pokemon card, they just cash it in for ETH. What if they want to split the actual card?
Well, they just choose the ETH option, right?
Yeah, you would choose the ETH option.
I remember from
the card.
But if it's a group, how do you take collectively? They can vote or something
so they
to
would
take the card.
So I think the way Mega Rip did it was, let's say like they had this entire pool, and then I think they ran like a 24-hour auction where if you were a member of the pool, you had a chance to actually buy that actual NFT in an auction format, and then obviously the proceeds of that would get split up among the pool. If not, it would all go back and they would take the ETH.
Makes sense.
This is
interesting.
Fascinating.
Well, I am I top blasted on FOMO. I'm in. This is how I like to do these things. I like to enter.
It's down like 16% right
now. Buy my bags.
I bought some more this morning. I feel like every day I wake up and I buy a little more. I have a sizable position. It's on chain, so like, you know, I'm bullish on it. I think it's going to go up multiple.
This is an ETH heavy episode. GMoney. We've got Joseph Shalom of Sharplink coming on right after you.
All right, yeah, great guy.
We'll have to ask him about this. Last thing, man, give us a shout out about your show, Full Port.
Oh yeah.
Tell us about your new show and tell our audience where they can come and watch you guys.
Yeah, for sure. So Hunter Orel and myself, you know, we've been like, you know, obviously buddies for a couple of years now, since early NFT days, and we've always talked about doing something together. And a couple months ago, he was like, hey, like, let's do like a live stream or a podcast together. And I'm like, I don't know. I don't know if I want to like commit to it, or, you know, if I even want to do it. Cause I did have a podcast a couple years ago during like NFT time. And like towards the end of it, I was just like so burnt out with it. And I'm like, like, what am I doing with this? Whatever. And so, but I was like, yeah, like I had taken some time off after I wound down 9DCC. And I'm like, all right, I'm down to like just kind of talk and shoot the shit and give my market takes and stuff on that. And we started doing it like 2 months ago, and it's been like gaining and picking up in popularity and views and stuff like that. So it's been encouraging and it's been fun. So we originally started off doing it once a week. Now we're doing it twice a week on Tuesday and Thursday mornings at 10:30. And, you know, you can find us. I link it in my profile, GMoney NFT, but it's called Full Port Show. on Twitter, and yeah, like we just come on and talk about markets, both like TradFi, crypto. You know, like obviously the last couple of months and weeks we've been talking a lot about AI, even like miners, and also like stuff that I've been doing with AI, like kind of like, you know, just messing around with this stuff. By the way, if you guys get a chance, check out Grokbot. I'm like, I started using it yesterday. I think it came out like 2 days ago. Yep. Very good. Like the UI is the experience is very good. So I highly recommend you guys give it a shot.
GMoney, always a pleasure.
You're
Much
the man,
love.
GMoney.
Yeah, likewise.
Thanks for being a part of the show. Always down to have you back, and glad that you started your own pre-bull. You'll get addicted to seeing the growth and trying new things on clips and on titles and on thumbnails and on posting and guests and no guests and chat and no chat, and it's just it's a whole science. And we've been doing it now live for about a year and a quarter. And we are really hitting a stride now, finally, and it's deep bear. So we're pretty excited about what's coming in the bull, and same for you, man.
All right, cool. Thank you. I appreciate it. I'll probably hit you guys up and ask for any advice or pointers you have, because it's all new to me, right? So it's like, but it's been fun. It's a cool learning process. I actually just bought my like my camera and like a better mic and all of that. 'Cause I'm like, fuck. I'm like, we're going real on this. So gotta invest in the equipment.
It never stops. This is the first day with this sign up. Yeah. So it's just continuous.
And there's still changes, you know. So, all right, GMoney, thanks for being a part of it, man.
Awesome. Thanks for having me, guys.
Have a good weekend, buddy.
See you next time. Thanks, man.
Bye.
Alrighty, guys. As you guys know, I did top blast FWA. I'm down a little bit on that. Tom Lee says 60K 2030. Yes, we got Joe Lubin on. I purchased additional cheaper shares today per Circle B Hype. Attaboy. It is accumulation season. If you guys have been following the show, all we've been doing is accumulate. And yeah, I mean, it's a good time to be an accumulator.
A massive thunderstorm brewing outside my office right now. I can hear the thunder, and it feels like the bull market is coming. It feels like it's just brewing underneath the surface. I think you're absolutely right. I mean, that is what we've been preaching on this show. Has been accumulate, build positions, just stay patient, and continue to survive, because in hindsight, 6 months, a year, 2 years from now, we're going to be looking back on these market conditions and just thanking the market, thanking the universe for providing us these prices.
Is that the thunder that I just heard?
You can probably hear it. Thunder. It is. So. Yeah, lightning is brewing.
We've got Kean of Lido, Joseph Shalom of Sharplink, talking about ETH, staking, treasuries. I mean, this is quite a timely episode. I know we're a couple minutes past here, but there has been a lot of rumbling about lowering the ETH issuance rate, the staking rate. There has been rumblings about economic security, about what this means for Ethereum, for large holders, for protocols like Lido, and publicly traded companies like Sharplink. So great episode here ahead. Let's get Kean up. Let's get Joseph up. It's a beautiful Friday in New York.
The public discourse has been hot. And so it feels like Ethereum is like, things are brewing again. Kean and Joseph, good to see you guys. Thanks for coming on.
Great to see you again. I think the last time you skipped us for your sister's wedding, so this is going to be a banger episode.
She is happily married. Yes, I was missing you guys, but I was watching the stream as she was walking down the aisle. So I think we're up to speed. And like Andy said in the intro, I mean, there's plenty to chat about. Obviously, first and foremost is I believe it's $200 million of ETH that was staked through Lido via Sharplink. Congratulations. Let's start there. Joseph, maybe you could tell us, why this was timely. Why did you choose right now to do this staking move, and why choose Lido as a partner?
Sure. So Lido is the largest and most liquid staking protocol in the Ethereum ecosystem. I think over $16 billion. And from day one, we've been making at Sharplink our Ethereum productive. We staked nearly 100% starting last June, and we're building a portfolio of ETH from simple staking to liquid restaking tokens into DeFi. And the announcement with Lido is taking a pretty big sleeve of our treasury, 200 million of about 1.7 billion, so that we can use it to do things that are portable and composable. And for people in crypto, they completely understand what that means. But for traditional investors, in crypto, you can take ETH, in this case, wrapped ETH coming from Lido, and you can use it for other purposes in the ecosystem. In this case, we're going to use a bulk of that to put it into a new Galaxy Sharplink fund so we can stay liquid in Lido, directional in ETH, and then make it productive on chain. So it's actually quite exciting. So we're really happy to partner with Lido. We do tons of diligence, and it was an easy choice for us when you think about liquidity and composability.
Yeah. And Kean, from your side, I mean, please, you guys have been doing this a long time. One of the leaders in ETH staking. Tell us about absolutely the leader in ETH staking, no doubt. So tell us how this ultimately came together and what things have been like from your perspective.
Sure. Well, firstly, like we are incredibly excited to be working with Joseph and the rest of the Sharplink team. I think we were speaking to the team late last year, having initial conversations, educating the guys on what we're doing. We're incredibly fortunate. One of the gentlemen on Joseph's team, Cam, I think he's the head of DeFi for Sharplink. He was incredibly knowledgeable about what Lido was doing, the benefits of using stETH and wrap stETH as collateral, liquidity. So it's been absolutely fantastic to kind of build a deeper relationship with the Sharplink team. And I suppose to maybe answer your question or your original question more directly, like I think this is just an incredibly strong signal for institutions more broadly. Like the commitment that kind of Sharplink and Joseph has shown to kind of move and allocate 200 million, which is a significant amount of capital, like Joseph mentioned, into a battle-tested protocol like Lido is just a tremendous endorsement for what we're trying to do. And for me, like we're definitely seeing a common theme from these digital asset treasury companies and different asset managers that they don't want to sacrifice between earning yield and trying to maintain liquidity. We're seeing these institutions come to Lido because they want both. So again, I can't really emphasize enough how excited we are to work with Joseph and the rest of the team. And I'm incredibly proud of all the hard work both sides have put into this to get us to this point.
Yeah, I mean, Joe, from the perspective of really trying to maximize, ETH per share from the Sharplink perspective, when you think about allocating capital, whether it be through this initiative or other similar previous ones, like through Linea and through that kind of initiative that you did with Joe Lubin over there, and kind of just looking to maximize ETH per share, while obviously, navigating on-chain risks, smart contract risks, regulatory and compliance risks. How do you think about more broadly the strategy as it has changed throughout the last several months? And then looking forward about the strategy to maximize ETH per share. And then I think that'll take us into the whole issuance conversation as well.
So to us, it's very simple. Unlike Bitcoin, who I'm a huge fan of, ETH is a natively productive asset. So if you own it and you own it on behalf of shareholders, you damn well better make it fully productive. And for us, that doesn't mean just achieving the Ethereum staking rate. We use Caesar as our benchmark. To me, that's the risk-free rate that you want to actually try to exceed. We call that alpha. And it's actually portable alpha in the sense that the sources of that excess return can come from lots of different places. It can actually come from optimizing the validators and the staking operations you use. It could come from allocations to DeFi. And earlier this year, we allocated 200 million through ETHFI. And then it can also come by putting it into fund structures like we're doing with Galaxy. And the reason why we purchased 200 million of Lido is you could have funded that type of investment with dollars or stablecoins, but you wouldn't be directional ETH. And if your conviction is that Ethereum is the future settlement layer, and your whole purpose of your digital asset treasury is to give investors exposure to ETH, you can own Lido, you can pledge it, and you can be directional ETH. So that's very easy. And then the ETH we earn in staking rewards, you just put back into the treasury and it compounds itself. When you talk about risk and compliance, we were the first to go out into DeFi, but we didn't do it by leaving our qualified custodian. And in the case of this sleeve, this 200 million allocation to Lido, We're taking that token and keeping it in Anchorage Digital, a federally chartered bank. So you don't have to compromise on smart contract risk, security risk, go into a Web3 wallet and leave your custodian. You could do it all as institutions do in trusted counterparties. So we're really excited. I think you're going to see a new wave of productivity coming from digital assets treasuries. Some are going to choose to build staking operations. Some people like us will choose to be the most sophisticated deployers of our ETH because it's permanent capital. And maybe later we can talk about what it means to have permanent capital versus what you see in crypto, which is a lot of short-term mercenary capital.
Yeah, we've certainly seen the merry-go-round of mercenary capital as it goes through the L1s, it goes through DeFi. The entrance of permanent capital is a welcome occurrence. I think 8363, this EIP that was proposed around the issuance schedule, caught a lot of people by surprise. It felt like for once the Ethereum community actually came to consensus on a thing, and it was against this thing. I didn't see too many positive takes on it. Joe, on a post August 8th, you said it would undermine DeFi and erase the native yield advantage driving billions in institutional adoption. Maybe you can just from the institutional perspective, you guys are pioneers and showcasing what it means to have institutional Ethereum access and exposure. Why is this so detrimental? At the face of it, I guess if I were to strongman, the proposal, it would be bringing down issuance, less supply inflation would mean, overall a higher ETH price. Why is that the wrong thesis, the wrong perspective to have from someone who's on the ground working with Ethereum day in and day out?
Yeah, I wrote a piece and I want it to be very thoughtful. And I want to start by saying the folks who proposed that are not bad people. They actually have ETH and Ethereum at their heart. I find them to be a more academic crew. But when I wrote the title of my piece, I tried to keep it as simple and digestible as possible. The wrong proposal at exactly the wrong time. Why do I believe that? Ethereum has been in a bit of a leadership crisis for the last 6 months to a year. It doesn't have the Solana treasury with built-in BD. It doesn't have, vast swaths of token they can give out to win business. What it does have is 11 years of exactly what institutions are looking for: security, liquidity, and trust. And the reason why this is exactly the wrong time to mess with the monetary policy of Ethereum is, one, this Ethereum staking rate, call it dynamically in the mid 2% range, is essentially the risk-free benchmark for most of DeFi, borrowing and lending. And DeFi was built on Ethereum. Ethereum has a massive moat around DeFi. Why would you want to undermine one of the most successful elements? And that DeFi, the swapping, lending, borrowing that Ethereum dominates with that risk-free Ethereum staking rate, then allows many more stablecoins and tokenized assets to enter the ecosystem. So one is you'd undermine the core strength. Second is there's a view that the staking rate is just giving out rewards to validators and big institutions. But as you see about a third of all ETH being staked, that money is not leaving the ecosystem. It's going right back into it. What do I mean by that? Sharplink takes a significant portion of our ETH rewards, puts it back into DeFi, puts it back into blue chip protocols, pledges and invests in projects like Lido. It's permanent capital. It's not being taken out and dividend to investors. And then the final thing I'll say is it really is a differentiating factor from Bitcoin. If you're an institutional investor and you want exposure to the future of crypto, you can own Bitcoin, but you get no yield out of it. One of the reasons why institutions really like Ethereum is the fact that it has a native productivity. And if you want to get the upside of a network plus yield productivity, it is massively differentiating. And when Ethereum is finally on offense and winning 55% of stablecoins, over 50% of RWA, it dominates DeFi. Why would you want to rug pull the monetary policy that is the future of growth of the ecosystem? So again, we don't think these people are ill-intended. We do like the idea of scarcity and some limit on staking, but wrong proposal at exactly the wrong time.
Absolutely.
Kean,
Yeah.
Just kind of passing to your side from the Lido perspective, from what you've seen over the years of liquid staking, through the merge 2022, just been just a ton of monetary policy changes, economics, right? The industry is kind of going through this coming of age of trying to look at these blockchains more like a ledger and a business with a profit and loss, looking to kind of turn these things into very investable assets, perhaps missing the whole store value and monetary premium thesis here that I think a lot of Ethereum folks have been pioneering and pushing forward. From the Lido perspective, do you agree with Joe here? What is some other kind of nuances that you think are a bit important to note?
Yeah, like I would definitely echo and agree everything that Joseph has said. Like I think the approach is misguided. I think obviously from a Lido perspective, we're not in favor of this. I think the idea that cutting issuance and effectively cutting staking rewards to nothing doesn't necessarily mean it will solve the problem that it's trying to solve. From an institutional perspective, we were conducting interviews over the past kind of 2 months. I think I spoke to maybe 10 or 15 different institutions, tier one, managing billions, if not trillions. And I haven't met anyone that is supportive of this idea. I think everyone knows that you're effectively, you're shooting yourself in the foot. Again, as Joseph mentioned, you're just making it incredibly easy for institutions to move to Solana.
Yeah.
The other big thing we've noticed, which is again critically important, is just to keep the network decentralized. We've met a lot of people where if the staking rewards rate was to go down to 1.5%, they don't see the point in running a community staking node helping to support decentralization because there's, I suppose, no meaningful upside to that. There's a lot of effort and no reward. And then the final thing I would say from, again, speaking to different asset managers and ETF issuers, they've spent millions launching these stake products, lobbying governments. There's been a huge amount of due diligence. There's been an ecosystem launched over staking. And the idea of cannibalizing it right now just doesn't make sense.
The beautiful thing about Ethereum is that anyone can make this proposal. That is actually the beauty of the governance process. But the flip side of that is if it's not some technical change where the technical researchers need consensus, this is a business model and monetary policy change. It requires consensus from the ecosystem, and it's just simply not there. And I think the voices have been voiced, and I think most of the voices have been moderate and reasonable and Ethereum aligned and not greedy and self-serving. So I think this has almost no chance of passing, but decentralized governance allows anyone to make these type of proposals and then others to, democratically express their views. And that's the beauty of Ethereum. We're not dominated by one voice.
Yeah, and I think Rob may have some more specific questions about the proposal and the nuances there. Just one quick thing. Is there anything that you guys would like to see with
that was actually
issuance?
Exactly my question,
Yeah,
Andy.
is there
People came out in force against this, but we didn't really hear from people as far as, okay, is ETH issuance perfect right now? You would make no changes, or if you were to have a perfect world and make changes and it were to go through, what would you do to ETH issuance and the monetary policy right now?
Yeah, Kean, you want to start?
Yeah, I think, look, from my perspective, is Ethereum perfect? Absolutely not. Is issuance perfect? Again, not. But there's so many other things you could focus your attention on and make a more meaningful impact. Like at the end of the day, everyone wants to grow Ethereum adoption at an institutional and also at a retail or personal level. So for me, I just think more effort could be spent on making Ethereum more accessible, building applications on Ethereum that grows adoption. So again, for me, I just think people are spending their time and effort on a topic that's not exactly the most high on the priority list. And there's time better spent elsewhere.
And Joseph, anything from your perspective as maybe a consumer of ETH yield rather than a supplier, what else would you be looking for?
To be honest with you, at this moment, when Ethereum feels like it's going on offense, look at the scoreboard and compare it across stablecoin adoption, tokenized real world assets, and and DeFi. I would be spending my time and money, and I'm doing both to drive the institutional adoption. We're at a moment that matters. The world's largest institutions are going from tokenizing de novo or brand new products. When I was at BlackRock, we took a couple of years to plan and get our BIDL token to be the largest tokenized fund in the world, but it took a couple of years. A year and a half after I left BlackRock, they're tokenizing existing funds, money market funds, with $8 billion of existing assets. That is like 30% of all tokenization happening in one shot. And so I'd be very, very focused on supporting those use cases. And then I'd also be very focused on building a differentiated offering in Ethereum for agentic. I know it sounds like a cliche, but if you're dominating stablecoins, which is the money layer, you're dominating in tokenized real world assets, which is the asset exposure layer. It's not a new asset class. And DeFi and on-chain finance is where a lot of the execution is happening. The agentic layer is just the automation layer that's going to bring billions of new users to Ethereum. They may be agents, but they're users and they're going to transact and they want decentralized rails. So I'd be focusing on that rather than messing with the protocol. I think that is the most important way to drive Ethereum adoption. And then when you get that level of transactions, the burn will pick up and you'll start seeing Ether be what it is, which is a really important trust commodity that you're going to need to do on-chain finance. So I'm less focused on making technical changes to the protocol. I'm actually hoping we can put it in the hands of every person in the world.
Yeah. Kean, something specifically with regards to Lido. You know, Joe mentioned the exposure with the $200 million of ETH into the protocol, as well as there is Lido rewards that you earn through staking with Lido. There's different programs. Obviously, enterprise and commercial deals are now a part of kind of Lido's institutional offering here, right? Not needing to get into the details here, but kind of a separate tangent that I'm curious how you're thinking about is, we coined this term revenue meta. It's kind of a silly term, but it's what's happening where you've got these protocols that are earning a lot of actual revenue, right? From some product market fit, whether it's perps, whether it's trading, whether it's yield, whether it's staking, whether it's stable coins, and they're kind of restructuring their token models around essentially treating token holders as first-class citizens. And I want to say, Joe, that I think that's where this EIP is coming from, is kind of from this kind of potentially short-lived pendulum swing in a bear market of, hey, we want to, try to make these crypto assets more attractive to investors by essentially evening out their emissions versus their kind of inflows, trying to kind of turn that into a positive. A lot of this, stem from the administration that has previously been elected. The Trump administration, Hyperliquid kind of came out, did this, huge buyback program. And so you've got protocols like Lido, been very, very profitable for a while, but you have these emissions, you have expenses, you have all these things, Kean, that investors are now coming to you and basically saying, look, we don't even want to really get involved unless we're looking at something that we're investing into a business where the equity is the token and the token holders are being treated as first-class citizens, meaning buybacks, meaning transparency, meaning openness, profit sharing, et cetera. And so I'm just curious, Kean, what your current viewpoint is from the Lido perspective, the Lido token perspective, and just this kind of rhetoric and current era of the token market in digital assets. Outside of Bitcoin and Ethereum, maybe you put in something like a Zcash in there or some other kind of like monetary assets. These on-chain businesses, the way that the tokens are being thought of now, how do you think about this from a Lido perspective? What changes are you making? What changes are you not making? How are you guys kind of going about this era?
Yeah, it's quite a broad, and I suppose there's a lot of different nuances to this. And I think like anything in life, there's levels. I definitely view Lido as tier one, battle tested. One thing that Lido is tremendously good at is getting feedback and listening to feedback. So by that I mean the Lido Research Forum, anyone can go, post, give feedback, give guidance. And I can say, again, with absolute certainty, the contributors in Lido, they do look at that and they take it seriously. And I think that's been one point of criticism that's been raised a number of times against Lido, where All the revenue is being generated from staking and in the ETH, and it's not being passed over to LDO token holders. So one of the big actions that have taken place over the past year, and that's really kind of ramped up over the past couple of months, is LDO buyback program. So this is, I suppose, probably the first prong where we're trying to again increase the token price, give, I suppose, token holders skin in the game from the revenue that's being generated in Lido. But again, this is the first prong, and there's definitely a huge amount of work taking place behind the scenes to, okay, how can we do more for token holders? How can we implement their feedback? So what I would say is kind of watch this space.
Yeah. But you generally kind of see this shift as one that is healthy and signs of a maturing space. Is it overextended? Just kind of more broadly speaking, I'm curious what you guys think about this kind of this, more revenue focused, product market fit focus that we're entering as a space.
Personally, I think it's fantastic. Like, it's a sign of maturity. Like, I've been in crypto for around 10 years, and I would say there was never really talk of a P&L, how do you manage risk? Now suddenly institutions are entering the room, people are looking at it from a different lens. Whereas I think before it was a little bit of throw it at the dartboard, see what sticks. Now people are asking real serious questions. And again, I think that's a sign of maturity for Ethereum. Like, if you look at it even just from a business perspective, like, you have the work that Joseph Shalom is doing. Again, I always think Joseph is a de facto head of BD for Ethereum to a degree. All the work that DATs are doing. You have Ethereum Institutional, you have the Enterprise Ethereum Alliance. These are, again, bodies that are building serious institutional and just structure around Ethereum. So I think this is all positive developments, and it's a really good sign to see.
In addition to sort of the expanding universe of Ethereum, I guess is one way to put it, we saw Fidelity start to now offer staking on its Ethereum product and start to bring that to market. Joseph, maybe just a reaction to what you're seeing in the enterprise and institutional capital markets as it pertains to Ethereum. What has the demand been like? And is there still money on the sidelines that is waiting to come in? And what are they waiting for?
Let me give that answer in two ways. I think since basically June, when the Ethereum community got its act together, stopped flagellating itself and focusing on the negative, and actually started telling the real story of what's coming. Again, I keep on saying, look at the scoreboard. A group of ecosystem stewards, including Joe Lubin, Tom Lee, myself, and dozens of others, funded spin-offs from the EF, so more nodes in the ecosystem. You've seen for the first time in what I think are years, Ethereum start outperforming Bitcoin. I think if you look at the last 60 days, ETH has outperformed Bitcoin by 14 points. It's outperformed Solana. It's outperformed Canton by almost 50% just in a 2-month period. And there's a reason for that, is that the largest institutions in the world, from Fidelity to Morgan Stanley to Franklin Templeton to JP Morgan to BlackRock, they're launching their new funds on Ethereum and the L2s. And I think one of the reasons why you're seeing ETFs start seeing inflows again is most of Wall Street understands that if most transactions are going to end up being on chain, you're going to need ETH as the trust commodity, the security commodity, the store of value for these transactions. We haven't seen enough value accrue from the L2s to ETH itself, but I want to see 10 Robinhood announcements where you're seeing, an L2 partner with one of the largest fintech companies in the world. The transaction values you've seen in the first 3.5 weeks have been off the charts, and that's really, really good for the long term of Ethereum. I do want to mention one other thing that's really important. We're in the business not only of helping fund the Ethereum ecosystem, but create new standards. And what do I mean by that? If you have permanent capital and you can deploy it into DeFi, or if you can deploy it into Lido and make a commitment that's not 3 months, 6 months, a year, but you can make a multi-year commitment because you have permanent capital, you can create not only incentives for your investors, and I'm not talking about the details of any deal, but you're now being able to push out the term structure of crypto. If you want to borrow against your ETH today, good luck getting a loan for more than a year. But when you start pushing the duration of your deployments, you can start putting a 2-year mark, a 3-year mark on borrowing and lending against your ETH. And that's really, really important to help shape an ecosystem. It sounds very tradfi, but that is how markets are made, not in 1, 2, 3 month mercenary capital and yield harvesting. So we're in the business of raising standards, setting new benchmarks, and we're going to do that. And we hope the ecosystem rinses and repeats.
And yeah, that is certainly something that I think we're looking forward to. You mentioned it earlier and alluded to it again. Can you describe the permanent capital that you've got at Sharplink and why it's so important to building this base on Ethereum?
Sure. Most capital in the crypto ecosystem is either short-term oriented, do quick diligence on a protocol, but you really don't care. You want to harvest incentives for a few months, and then you pull that deployment out, and you move to the next one, and you harvest and you farm over and over. Or you have venture capital, which has 4 to 6 year equity-like returns. You want a convex outcome for your investors. There's very little in the middle who are people who own ETH like we do. You can buy or sell our stock and express your views on Sharplink, but we're not in the business of selling our ETH. And in the Bitcoin space, you're seeing the DAT start sell. And if you're an ETF, which has large amounts of capital at BlackRock, Franklin Templeton, Fidelity, you have to provide daily liquidity to your investors. So if they want their money back, you have to sell that ETH that day. So there's very little you can do besides buy and stake ETH because you need to have that daily liquidity to give money back to your investors. So we fit in a really great space, and that's why it's a better exposure vehicle. If you believe in the long-term Ethereum opportunity and you want to make your ETH productive beyond the Ethereum staking rate, permanent capital is able to do that in a way that venture capital doesn't, mercenary capital doesn't, and the ETFs, which are really important exposure vehicles, just can't deploy their ETH on a long-term basis because of the daily liquidity to investors. That's the easiest way I can explain it. All great vehicles, but just different than permanent capital.
Very cool. And ultimately, our thesis that we've been talking about on this show, going on for the last couple of months here, has been this accrual of permanent capital in the space, kind of shaking out the weak hands, if you will, and building more of a stronger capital base. Ultimately, is a confluence with the tokenization super cycle of tokenizing all of these asset classes. These tokenized assets ultimately proliferate across the entirety of Ethereum, make their way into DeFi protocols such as Lido, such as the rest of the OG blue chip DeFi protocols on Ethereum. And we re-rate not only the TVL, but the total addressable market for DeFi and on-chain finance and digital finance as a whole. I mean, please, can you pick up kind of on this thesis? Does this align with what you guys are seeing in the market? And once that happens, how long do you think it will take and where do we go from there? To both of you guys, feel free to jump in.
And why don't you go first and I'll give you my take after.
Sure. Yeah. Look, I think again we're in a fantastic state where adoption and the different use cases are picking up immensely. For us, one of the big things that we launched, I think in December of last year, was with Wisdom Tree. So Wisdom Tree launched the first liquid staked ETP in Europe. It was the first 100% staked ETP, and they would never have been able to do that without liquid staking and a decentralized protocol like Lido. So for us, kind of going through this journey with them, I think the answer asked us something like 400, maybe 500 questions, and getting them comfortable with the idea of working with a DAO, decentralized protocols, explaining that Lido is actually a middleware. Nothing is actually staked with us. There's 800 different node operators in the background. So for us to convince a heavily regulated public company, Wisdom Tree, that look, if you have a problem, and Joseph mentioned this already, where you can only stake a certain proportion of your ETF or your ETP because you need a percentage for liquidity, we were able to come along and show them that liquid staking, you can actually have a 100% staked product, meet your redemption and liquidity requirements, and ultimately pass on those returns to investors. And then, of course, from a Wisdom Tree perspective, you're able to launch a better product. So for me, I am incredibly bullish on all the things that are happening, all the huge logos that are coming into the space, and it's just fantastic to be a part of it right now. We're definitely at the forefront of change.
Yeah,
And I think we're at an Amazon, Uber, lithium, NVIDIA moment. And what do I mean by that? Every one of those assets went through a period. Amazon was viewed as an overpriced bookseller trying to sell more books online. Uber was being questioned for making their transactions really inexpensive and subsidizing both the drivers and the users. NVIDIA's TAM was graphic cards and chips inside laptops. Lithium was used for very few use cases. The market then caught up, and for each one of them, they understood that the TAM was 1,000x what the market was pricing at the time. Amazon was changing the market structure of finance. Uber doesn't want to be a cheap rideshare. They want to be an everything app for your daily lives. Lithium became required for, and rare earth, for new technologies and new business models. NVIDIA, the moment they went from powering laptops and gaming to being essentially required for all inference in the world, you saw the price not only catch up to the narrative, people were betting on the future of demand. And I think you're starting to see a real understanding of what Ethereum is going to be, which is the global settlement layer. And they're seeing ETH as something that the price is lagging, but the market share and demand is not. And then the final thing I'll say is one of the reasons you see divergence is crypto and on-chain finance pledge collateral in very different ways. In crypto, people would pledge their Bitcoin, which has no yield. They would pledge their stablecoin where they weren't earning yield. No one in finance would ever do that. They pledge treasuries, high quality liquid assets. Why? Because they get yield as they're putting out collateral. And that's what we need to bring more and more into the crypto space. So I think Ethereum, you're making a future bet on the future of on-chain finance. And I think the price is underappreciated relative to the amount of transactions that'll be coming. So we're in the business of telling that story and giving people a little bit of a peek to what institutions are doing behind the scenes today. You're seeing a bit of the tip of the iceberg of what's coming. It happens slow and then it happens really, really fast.
Joe, Kean, I mean, impeccable answers. Thank you for your time. Very bullish Ethereum, very bullish on this collaboration. Kean, go enjoy that Euro Summer, man. That's a Euro Summer shirt. Joe, I think you're somewhere in New York or New Jersey, somewhere at your place for the weekend. I'm going to go take a break here. Guys, thanks for your time. Thanks for being a part of the show, and bullish ETH.
Ethereum's in good hands with you guys. Thank you for stewarding the industry and sharing your time with us today. Appreciate it.
Really love seeing you guys, and I'll see you at the next one.
Thanks, guys.
Sounds good.
Thank you.
Enjoy the Euro Summer, Kean. I'm serious.
Cheers. I'll go for a pint. Don't worry.
There you go. Alrighty. See you guys soon.
Cheers, guys.
Bang. There it is, Rob. The ETH bulls are out. I just looked at there's approximately 140,000 BTC left on OTC market. SBET MNAV is 0.8. Ask Joe why they haven't done more share buybacks. Yeah, it'll come. I think it's just a matter of time. I mean, it's a matter of patience, a matter of patience, it's a matter of patience. That's how I think. All right, guys, we got some more news to cover. We got to talk about buybacks. We got to do daily equity. We got some signups. We got some position updates. I'm going to take a super quick break. Be right back with that, and we'll continue the show, guys. Don't go anywhere.
We get deep. We get deep hard. You know we get deep. We get deep, you know we get deep. We get deep, we get deep, you know we get deep.
Yo, what's going on, guys? This is ETHFI with the Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
Guys, Robinhood Wallet times Lighter points are live, and we mean live. Earn points in real time. Refer your friends to earn additional points boost. Lighter has announced its points program with Robinhood Wallet. This is the Robinhood Wallet instance of Lighter. So this is available on Robinhood chain. You can trade perps there. There's an $11 million LIT token pool available for the Robinhood community with 2x points through Robinhood Wallet versus 1x strictly on the Lighter instance on the Lighter web app. And this is huge. I mean, Robinhood Crypto put out a post about it. This is the first time that Robinhood wallet users are going to be exposed to what it means to getting a crypto airdrop for earning their token of choice. I mean, this is important. This is like, okay, you're a Robinhood user. You trade on Robinhood. You like the platform. You're bullish. You're trading perps. You're making some money. You're losing some money. You're making some money. You're losing some money. And all of a sudden, you get paid. You get paid out of nowhere. You get a airdrop. You're like, oh, Lighter tokens. Where did this come from? And so imagine you're just on the app, right? Like you're trading perps. You're, giving it a go. And what you see is, oh, I've got this Lighter token. Oh, look, it's done pretty well for the last, several weeks, several months. Maybe I'm going to buy more. Maybe I'm going to keep trading on it. And so like the distribution that Robinhood Wallet and then eventually Robinhood Mainnet will get from just a simple Lighter token airdrop for perps users, I think has orders of magnitude larger as consequences in distribution and mind share and growth for the protocol than just necessarily, here's the free Lighter tokens for trading. Thanks for coming. I think this has like a larger substantive outcome for new traders of perps. First of all, to understand how perps work. Second of all, get that token and then look at the token, understand it's done well, and keep buying it. See the, the meme of the Vlad and the Vlad. I mean, it just all goes together. And I just think that, like, yeah, this asset and this perp exchange through this distribution channel is going to have a lot of growth. And I think that it's kind of hard to argue against this being bullish for Lido, the protocol, and the token. And so I think the only argument is, there's more emissions of the token. It's more Lido tokens going to traders. There's more sell pressure. I actually think these people might just see that they got it, see that it's done well, and want to buy more because they didn't know about it in the first place. And so that's my take. Lido perps on Robinhood. Points are live, guys. Trade 2x points on Robinhood Wallet, 1x on the app. I know Edward in the chat is a big Lido bull. Always good to have him around. And yeah.
I mean, I think this is a tremendous partnership. I think this gives Lido quite an edge. Obviously, Hyperliquid is kind of integrated into several wallets and has these different distribution channels with builder codes. But I think, Lido having this partnership with Robinhood, I mean, it trumps several of those distribution channels. And this is evidence that Lido is gaining market share on Hype.
Look at that sign, man. Look at that sign.
Yeah.
Look at that sign. Let's give a round of applause for Rob there.
Look at the sign.
Look at that
Look at the
sign, man.
It's right there.
How will institutions gain exposure to crypto? They don't want to hold a volatile token, right? Or they buy an equity part of the infrastructure. They will buy Bitcoin. They'll buy ETH. They will buy your revenue-generating tokens, Sir Luxaflex. Have faith. Think long-term. Zoom out. The institutions are going to buy your bags during the next cycle. You're going to make a ton of cash. Don't overthink it, buddy. Let's get into our daily equity segment powered by our friends at Denari. The circular financing behind the AI boom. Kind of crazy. JP Morgan just mapped out the circular financing death spiral behind the AI boom. You could say $46 billion in equity investments from hyperscalers into AI labs. You're talking Microsoft, Google, Amazon, Facebook, Oracle, investing capital into OpenAI, Anthropic, and XAI while locking in $879 billion of multi-year purchase commitments for the exact cloud chips and services those labs sell. You invest in the company, then you allocate to your own capital into the company. This is a playbook from Mr. DJT, the best of the best in circular capital financing, none other than Donald J. Trump. Let me buy something, let me tweet about it. Let me invest in something, let me buy the stock. What's going on here in AI land? They're taking a page out of Donald J. Trump's playbook. Rob, what do you think is going to be the outcome here?
It is so good to have you back, man. Look, I'm going to take somewhat of an opposite take to the death spiral. I think that the market has somewhat seen this. They've sort of absorbed it, digested it, and I think they're kind of okay with it now. We saw how the circular financing was playing out. We saw Oracle make a deal with ChatGPT, make a deal with NVIDIA, make a deal with Oracle. It was just this merry-go-round of revenue and CapEx. Everyone increased revenue, CapEx, and it flywheeled higher because that's what the market wanted. And then this circular financing, circular economics boogeyman came and sort of spooked the market a little bit. But we've known this. We've known that this is the way that the AI trade is working. We know that this is how this cycle is working. How long can the merry-go-round go around until the music stops? Is this a merry-go-round or is this musical chairs? I don't exactly know. But I think we're actually in a point now where it's okay because the market has known about this going on for a while. It hasn't caused the market to really retrace or correct too deeply. And it feels like now the market has digested this and we're moving forward. So I actually think this was a bigger deal a while ago, but now is no longer really spooking the market. I think it's going to come back and bite the market at some point, but I think there's plenty of room to run and plenty of distance that we can cover in the meantime.
Yeah, I mean, the AI boom is certainly being financed by a concentrated group of companies, right? They're funding each other's growth, they're pumping each other's bags, and they're going to accelerate the infrastructure build out. But it also raises questions, right? Revenue durability, capital efficiency, circular capital, counting dollars. Is $1 in my company, then I give it to your company, then he gives it to that company, and then it comes back to my company? Does that count as revenue for me, even though it came from me? Right? And so you got like this kind of like crazy, on my launch day, I made $1 million. So my ARR is $365 million. It's like, is your ARR really $365 million there? Shabbat Patel from Y Combinator, who just raised $1.2 billion to make your agent not turn into the obsession, girl. Like, I don't know. You tell me, Mr. Patel. I don't have the answer for you. So I just don't want to see, the rise of the circular financing affect the price of the NASDAQ, which is going to decimate your crypto bags, ladies and gentlemen. That is the Daily Equity today, powered by our friends at Denari, the leading U.S. tokenized equities platform, now live. All of tokenized S&P 500 live for U.S. persons legally. I know in crypto you put that VPN on, but this is legal KYC AML behavior that we do here on the Rollup TV. Let's get it. Thank you, Denari. Thank you, the Daily Equity. Guys, we had a debate. We had a question. We got a conversation to be had about buybacks. Do buybacks even work? I need a title change, and I need Rob to take a side here, because I got a question for you. Do buybacks work? What a diagram we got on the screen. Wow. Here. Buybacks, 2 words. No. Let's just pull that one out into 1 word there, buddy. All right. Guys, we got some work. We got some work. He had a White Claw already. All right. So here we go. Do buybacks work? Should they be a part of the protocol? Hype, Lighter, Pump, FRAX, Aerodrome, Uniswap, Lido, Derive, fake world assets. Do buybacks actually work? And should buybacks work? So this started because a clip came out of Paul, the CEO of Morpho, and he says token projects should not be doing buybacks because they're not ambitious enough if they are. If you're doing buybacks, if you care about buybacks, then you are basically shooting yourself in the foot for 10% extra growth on top of your asset versus the 10 to 100 to 1000x that we're really shooting for in this market. And so on one side, you have people saying that the revenue distribution to holders doesn't make sense. It should be reinvested into growth. The other side is the market saying, look, we only want to support companies that do buybacks. We only want to support companies that invest in themselves, that have actual growth, and that want to have people treated like first-class citizens who hold their token. And why would I own your coin if you don't do buybacks? And so I'm gonna ask my lovely co-host, the man with the mic over 6 inches from his mouth, ask him what he thinks about buybacks and their relevance in today's crypto economy.
Yeah, great question.
I mean, right? Like it's just bear market things, No,
well, here's the thing. You're right on some of the things that you mentioned, but I think there's a nuance here, and that's, yes, token holders want to be treated like first-class citizens. Yes, why would I own anything else that's not accruing value to my token? Yes, there are a class of assets out there that do generate revenue and do pass that back to the token. Why would I own anything else other than those assets? My position on this debate is that value accrual is imperative. Buybacks are not the only mechanism to fund value accrual, right? So I think we agree, right? Value accrual is imperative. There is a class of companies out there that are making money. There's a class of companies out there that are passing that money, right, back to equity and labs corporations. And they do have a token live, and it's not getting a portion of that revenue. And so you don't want to invest into that asset class or that class of tokens. But of those companies that do generate revenue, which I would like to see some data behind this, I would say of, companies that are still alive, they raised some money, they didn't stop building, they're still practicing and trying to put together, a good token or a good business. I would say maybe 10% of them have made $1. Right? Tokens that have, raised money, are in this generation of companies, maybe 10% of them have found some semblance of product market fit and have generated some money from some customer out there somewhere. 10% of the companies that exist today. Of the 10%, how many of those companies are passing all of that revenue back to an equity or a labs company? Maybe 50% of them, right? 50% of the companies out there are passing it back to equities and labs corporations, and there isn't a single dollar or single cent that is going back in terms of value accrual to the token, right? But that leaves 5%. of the companies out there that meet the criteria that say they have made some money, they have generated revenue, and they are passing some money, maybe not all the money, but some money back to the token. Then it becomes, how are they passing it back to the token? And by and large, the mechanism through which they've been passing value back to the token, the small set of companies and tokens that meet this criteria, they've been passing it back in terms of buybacks. That's not the only mechanism to pass value back to token holders. So obviously, multiple things are true here. Yes, more companies here need revenue. Yes, more companies here need to accrue that revenue directly to the token. The ones who are doing buybacks are certainly doing something right, but is buybacks the correct mechanism? And I would implore these founders to sort of do research into some of the other mechanisms that are out there. We haven't really seen like direct dividends passed back to companies in the form of cash or in the form of, if it was in the form of their emissions, in the form of their own token, that would be an emissions. We're not really looking for that. Buybacks is one of the ways where you can decrease supply. A dividend would be incredible, right? If you have a protocol that's generating cash, they have a token, why not just pay the token holders? Maybe they have to stake it, put it in a smart contract so that it's programmable. Just pay them in stablecoins, just pay them in pure dollars, right? Because that's the way the equities markets do this thing. Well, that's exactly it. That's how equities markets do it. It implies that they're securities. And that's why we haven't quite seen that mechanism. But by and large, we agree on a lot of this. The part where I would push back is that buybacks are not the only mechanism. Dividends are another mechanism. Maybe it's inhibited by regulation, but I'd imagine that there's more mechanisms out there in addition to buybacks and dividends where companies could pass value back to token holders.
All right, Mr. Clages, I really appreciate the thought. I just have to question whether we're solving the problem, right? It's like, okay, maybe we don't do buybacks. Okay. But isn't just taking the money that you earn and distributing as a stable coin to a token holder, is that not the same? What the argument would be is the waste of capital and not investing that into growth? That capital is, whether it's being bought back and burned or distributed via stable coins, different strokes for different folks. But what about you're not investing into growth? Because that is the crux of this.
I'll answer that directly.
So early,
yeah. But Andy, let me jump in here because I want to answer this point directly. If that's what your argument is, then you shouldn't have a token. You launched your token prematurely. And so if you're suggesting that your dollars are better spent into growth rather than accruing value to your token, don't have a token. There's no need. There's no rush. Why, the argument for passing value back into growth is a good one. And it's that the industry in the company is so early in its history that it's dollars better spent on growth. And that applies to so many of these companies because I think you and I, are one of the longer term thinkers, in this industry. We believe in the long-term growth thesis of this industry. And I think dollars should be spent in growth, gain market share, and then monetize later down the road. But don't have a token. Tokens, we've basically proven that in 99% of the digital finance use cases, tokens are unnecessary to the ultimate user experience. In the L1 trade, did you need a token to, pay validators to, bootstrap the economic security of the network? Sure. But in hindsight, it was premature to launch those tokens. And if you want to fuel dollars into growth, you probably should be doing that, but you should also take your token off the market. And that's not something that we've really seen. But I mean, could you imagine if a company said, hey, we're so early, we want to be passing our revenue back into growth. We're going to buy back our token, 100% of the token supply. We're going to take it private at 420 or whatever.
Well, you know what I actually predict may happen is that some of these tokens out there may be clawed back, and there may be like a swap for like tokenized equities, like the equity of the company may be the new token, or teams might just come out and be like, we screwed up on our token design. We cannot take the current token and allocate the equity structure that exists off chain into the current equity structure that exists, in the token landscape because, the labs owns X and the investors owns Y, and my great grandmother owns Z, and and so they might have to do the full rescinding of the token and then reissue a token that is the equity tokenized of that company. Now, when you look at the performance of tokens that have buybacks on the last, I think it's like 6 to 12 months. I mean, it's been a reckoning. And of course, this is obviously heavily carried by like Lido and Hyperliquid and a couple of these. But the tokens that have performed the best have revenue and they have buybacks. Pump, Hype, Lido. Obviously, those are the three leaders. So how do you reconcile with that? Is that a bear market phenomenon? Like, is it fair to say that within the bear market, perhaps there is a strategy that doing some sort of fundamental buyback floor protection, like the old memes of like the bids in the books, like what do they call it? Like the janitors are here to sweep the floors in the NFT landscape or something like that. Like, is that a fair strategy? Like, maybe the answer is what Luca Prosperi had commented on our post today, which is that you think about it in this way, and you start to turn yourself more into like a hedge fund rather than a we're just gonna do a programmable daily buyback. But then the pushback would be, well, the market has been rewarding companies that do daily buybacks in a programmable fashion. Look at Pump Fund. They started the programmable daily buybacks at a certain point, and you looked at that the market changed, the market structure changed after that. Hyperliquid obviously set the standard, Lido following. Lucas says, the buyback matter is quite simple from a corporate finance standpoint, and I'll pull this up on the screen. He says, assuming market rationality, you should buy back your shares and / tokens if the return of reinvesting that capital internally is lower than the hurdle rate investors require from the share / token. And so in rational markets plus a high return on equity, you invest. In exuberant markets plus a mid return on equity, you invest. In bearish markets plus a mid return on equity, you buy back. In rational markets plus a low return on equity, you buy back. In manipulated markets, question mark. And so maybe this is the right way to do it.
I like this. I mean, Luke is one of the smartest guys in the space.
So basically what he's saying is rational markets, like let's call it a sideways or decent market going up with a high return on equity, which means that your return on labor, if you will, is higher than your return on capital. Maybe you're nearing a local top. Maybe you think it's going up. In exuberant markets and a mid-tier return on equity, which is like a return on labor, you invest. But in bearish markets plus a mid-tier return on labor or equity, meaning like you could hire anyone right now, Rob, and your token's not going to pump.
Right. No, that's absolutely
or
the case.
A rational market with you could hire anyone or you could deploy any AI workflow, and your token's not going to pump. Buyback.
Right. And this is what we say. I mean, to put it in simple terms, in bull markets, the return on capital is greater than the return on labor. Right. So
that is true. However, it is not true in exuberant markets.
What's not true in exuberant? In exuberant markets, you would be going from a bull to a bear. And so, you don't want to be
exactly.
You don't want to be buying the
top of your asset.
Right. There is a point in which
Luke is actually arguing the opposite of what you said.
That the return on capital is greater. I mean, in bull markets, you have beginning of bull markets and you have end of bull markets, and
you have the end of the bear market.
Yes, exactly. And so timing plays a big part in that. And what Luca is saying is that the return on capital is the greatest at the beginning of the bull market. That's when you want to be buying your tokens, especially because, as we know, when bear markets transition to bull markets, they do so via apathetic market conditions when return on equity is very low. And so that is the best time to be buying back your token, right? Point of maximum upside, right? Point of minimum return on labor, return on announcement, return on equity. As that goes, right? it diminishes their upside, right? Because you're realizing the upside as the market goes and the bull market continues, right? And it slowly transforms as the bull market comes to a close, right? The return on equity gets higher because there are things that you can ultimately do to pump via narrative, via announcement, via product launch, via hire, right? And you're also reaching the top of the capital market, in which case the potential upside is smaller because you've already realized a large portion of the bull market. So no, I think man, Luca is super dialed. This guy has, I mean, he's super smart, and I mean, I can't say enough good things about Luca.
So then it looks like the Rollup intern commented this. We think this is the correct way to think about it, but how do you balance this versus turning yourself into a directional hedge fund, i.e. for your native token? Also, the market seems to be appreciating programmable flows versus arbitrary flows when it comes to buybacks due to a foundational trust issue in the industry.
Which Rollup intern tweeted this? Is a fantastic question by the Rollup intern.
Yeah, I think it might have been my agent. I think his name is Atan Soho. Yeah.
Mr. Duca Top Blaster.
And so Lucas says, programmable flows or not, it's not like deciding dividend policy for traditional company. It's the other side of a buyback. Large caps have always been actively looking at their price. Google used to issue shares when they had negative leverage because they knew the price of stock was very good. It's always about the return on equity versus earnings yield in the open market. Earnings yield is the opposite of price to earnings. Higher return on equity, you should invest. Lower return on equity, you should give money back. Point that Paul is making is that it's pretty concerning if small and high growth startups cannot deploy money internally at high return rates, especially when those companies are still zero to negligible revenues. The counterpoint, however, is that these token prices are littered with insider activity, have low float, can be easily manipulated, and doing finance calculations on fair prices is irrelevant.
You know, I want to take somewhat of a left field, off the wall approach and perspective to this, which is that in some way, shape, or form, every company is a DAT. More specifically, every company kind of has an MNAV. Every company kind of has an MNAV. If you follow me here on this is stretchy, pulley logic here, but you know the MNAV is tied to your return on equity, right? And so if a treasury company's MNAV is under 1, they would buy back their shares. If it's over 1, you would hit the ATM, you would buy back, you know, the token. Similarly, you know, your shares are effectively your return on equity here, right? But it is invested into via, you know, labor, capital, announcements, partnerships, product launches, these sorts of things.
Et cetera, yeah.
Right. And so in the market conditions that he's describing, it would be when your MNAV is under 1. That's when you would hammer your equity and you would invest in growth. Flip side is, you know, when it's exuberant market conditions and these things, right? Then your return on equity is low. That is when it doesn't make sense to buy back your own shares. It makes more sense to go back and buy your own token. So in a very similar way, you can kind of look at these treasury companies and how they react to their MNAV as in a similar way that you can react to your return on equity.
Well, Luca's got me thinking, like, I've just been trying to buy as much Zcash, Bitcoin, Hype, and other distressed crypto assets for the next bull cycle. But he's got me thinking, like, are we shooting ourselves in the foot, thinking too small, doing distributions out to buy more crypto assets versus just buying and buying and buying more into the business? And I think of it as like risk, right? I think of it as like there's a certain risk to investing into the business. There's a certain risk to this is our own capital, right? This is our own business. There's a certain risk to like, oh, you hire a new person, you spend $80K a year on them, $120K a year on them, you know, whatever it is, and it fails. What is $120K a year, or doesn't go as well as you thought? What is $120K in Zcash at 400 before the intergalactic run to 10K? You know, what does that get you? Well, it gets you like 3 million. And so like, you know, I guess the question is always for these VC-backed companies is you have a token. You're Morpho. Your token's trading at $2 billion, right? How do you allocate capital to help you scale? Like, I don't know. It's just different for different companies, but it just got me thinking, like, it is a risk question and like a operator, it's a skill issue. I mean, everything in life is a skill issue.
or an issue of time horizons. But I think your answer is actually in the flow chart. If you scroll back up to the original Luca tweet, you'll see his flow chart here, right? And if you're applying, right, because the Rollup doesn't have a token yet or ever. But anyway, you know, the Rollup doesn't have a token, right? And so in this flow chart, if you're looking, you can kind of treat the Rollup as a aggregation or a cumulative of all the tokens that are out there in some ways. And you can say that Zcash kind of falls into that bucket. And so, yes, Zcash is not the Rollup token, right? Neither is Bitcoin or ETH, but these might be the tokens that if we're in the market conditions and our equity is in the conditions that fall into, you know, one of the four quadrants of this flow chart, we would buy things, not the Rollup token because it doesn't exist, but we would buy the Zcash, those who are, you know, the tokens that make up the tokens that we would buy if it's the case where we fall into these market conditions. It's a little bit of a windy.
Or you would not buy the crypto asset or stock or house. You would buy more of AI workflow support, team,
yes, exactly,
office space, podcast gear, et cetera, et cetera. And so
so
scaling this out here.
Well,
I think this is like the Eli, like I'm 5. I'm just curious if we have anything that we should ask Grok before we should kind of close this out.
I mean, I was just going to say our business at the Rollup is a media company. It is somewhat decorrelated or uncorrelated from some of the other, you know, digital asset, digital finance companies that are out there. And so our return on equity might be different, whereas the general market conditions for return on equity are right now very low return on equity, right? We're in apathetic market conditions, low return on equity. And so it calls for buying back tokens. You know, you would basically look at this flow chart and you would say, where does my company fit in? Generally, we're in very low ROE conditions broadly for, you know, digital asset companies. I think our company also fits into that, although you could make an argument against that, in which case it wouldn't make sense to go buy tokens. It would make more sense to go invest into the business. But at this point, right, because market prices are depressed, right, and it's very apathetic out there, return on equity is low broadly, it would make sense to just buy tokens, whether that's your own token or other tokens that you believe fall into the category.
Just buy tokens. Just invest in.
I think that's
get a little gambler in you as well. You know what I mean? Like,
of this debate.
Well, it's also like, what do you think can outperform? Do you think your business can outperform, or do you think your personal allocations can? And that's going to be the question. So
if you the one thing that if you want to plug something into Grok here, it would be, you know, take Luca's tweet, put it into Grok, and say which of the 4 quadrants are we in right now. And I think we know the answer, but let's just make sure Grok is on the same page. I would say that we are in low ROE, bearish market conditions, and therefore the conclusion is buyback, according to Luca's logic, which I think is sound logic. We're certainly not in exuberant market conditions, that's for sure.
No, I mean, I think we both know it's highly likely to be. Wait, which you said it's
highly likely to be in the bearish market, low to mid ROE, which either way puts you into the buyback category.
Yeah. Yeah, bearish markets plus mid ROE.
Yeah, exactly. Which puts you in the buyback category. And Andy, to answer your question, it means don't go invest into the business, at least according to Luca's logic.
It means to buy back the token.
It means buy back the token. And what do you do if your token doesn't exist? Well, you buy back the tokens that you think are going to do well.
They're going to do well.
Yeah.
In this setting, returning capital via buybacks can be more value accretive than forcing internal reinvestment when the market is pricing tokens poorly and incremental returns on new capital only middling. He also flags blah, 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 bearish mid to ROE. This is a broad characterizations. Yeah, but I don't know. It's interesting. There's many ways to skin this cat, I think, no matter what. And people are not going to agree with this necessarily, but what makes a debate. That's what makes markets. That's what makes life. Ladies and gentlemen, that has been the roll-up today. It's time to close it out.
I mean, the other conclusion to draw here is too many companies and projects have tokens when they shouldn't.
Yeah.
They launched them too early.
Yeah.
And
And there's a weird certain advantage to not having lots of tokens, still having some capital left and waiting, having waited out this bear market.
You're not forced to play this almost
game.
unwinnable
You're playing a different game. Yeah. And you got the hindsight of like seeing all this token equity shenanigans, and you're not going to launch a token next bull cycle that doesn't have claim of the equity of the company. You're just going to launch your tokenized equity. Maybe that's not the best outcome as the previous cycles, but that's what happens to you. Guys, the industry is undergoing a structural change. Industry is maturing, infrastructure maturing, global adoption is rapidly increasing, and this continues to happen. And so kind of closing out the show here, these types of conversations, these types of simulations of digestible tidbits around tokens, around equities, all of this is important, but what matters is making returns. And you know what we say, guys, we'll be here day in, day out. We'll see you on Monday. W's in the chat if you enjoyed this stream. We're long. We're accumulating crypto assets the next 2-3 months to end off 2026. We'll just continue to accumulate crypto assets at all costs. We will continue to buy. We'll continue to buy. As you know, our strategy, our returns, they're generated over the course of multi-week to multi-month to year-long spot holds, buys, long-term. You're looking to do long-term capital gains. You're looking to buy into assets that are depressed, that narratives have not caught up to their actual fundamentals, and that people will come and buy from you at much higher prices, and you'll sell to them happily. And then you'll buy real-world assets.
No,
and I'm not talking about.
I'm buying fake world assets. Literally,
he's gonna buy fake world assets so he can buy real-world assets later.
Yep, you got it. There you go.
This is some crazy inception stuff.
That's the circular economy. It's not AI. It's assets.
Ladies and gentlemen, it's been the Rollup. It's been Friday. It's been an amazing show. Thank you so much for rocking with us. We'll see you Monday. Rain or shine, snow or sun, we'll be here. We'll rock. We'll cook. We'll print. You know where to find us.
Soho House.